Hey there, it's Walter here, and I want to talk about this ball and what it has to do with your trading. You see, recently I've been playing catch with my kids, and kids are great and all that. And it's been interesting watching them learn how to catch because my older kid, it's pretty easy for him to get the hang of it. And the little girl, she's just starting to get the hang of it and coordinating everything when she's catching the ball. And I think it's very similar to trading because when I first started trading, I didn't know how to coordinate what I should be working on versus what I should kind of put away and ignore until later. Now, you've heard me talk about this, and we talk about all three aspects of this, of trading, successful trading, profitable trading in the Small Accounts, Big Profits course. You can click the link below or above this video to get more information about that. But essentially, we need to have a system that we believe in, that we're confident in, that fits what we believe about the markets. We need to have our risk management rules set up so that we're able to make money consistently. And we also must have our psychology set correctly. Now, if something is happening, like if something is tweaked there, it's not going to work. And it's a lot like going to the doctor. If you go to the doctor and the doctor goes, hey, do you have acid reflux when you sleep? Or does your knee hurt when you do this or whatever? Your doctor is diagnosing and figuring out what's going on. The same thing goes on with your trading. And let me show you what I mean. I'm going to share with you my screen here. And let me just give you an example of what this might look like. Let's say that you're trading a system. And let's say that for the sake of example here, let's say you've got a 38% win rate. I'm just going to my risk calculator here. I'll put the link below this video so you can get it. And then my risk amount. So my reward to risk ratio, this video shows you how to use it. But I've got a 38% win rate. I've got a 3-to-1 reward risk ratio. So I'm risking $1,000 to make $3,000, for example. I have a 2% risk amount on my trade using the fixed fractional method. And I'm going to look at the next 10,000 trades. Will I have a drawdown of 30%? And the answer is almost certainly. So why is this important? Well, quite simply because if I think that the reason why I'm in a drawdown using this strategy with the 38% win rate, 3-to-1 reward risk ratio, and 2% per trade is because the system is broken, I am wrong. That is a misdiagnosis. It's the same as going to a doctor and the doctor saying, hey, your knee, you blew your ACL in your knee when it's really just a sprained patella or whatever, right? That's exactly what's going on with your trading. So let me give you some common ones that come up. I have a 60% win rate, but I'm still losing money. That usually screams out the reason for that is you need to work on a more aggressive target. Yo, how's it going? Sending love. Good to see you, Steve. So your target, a more aggressive target. So if you're going for 1-to-1, go for 3-to-1. If you're going for 3-to-1, go for 5-to-1. It'll pull down the win rate, of course, but it's more likely that those bigger profits will help you achieve your goals and get beyond sort of break even to the other side. Another one is I don't follow my rules. I'm not following my rules. That usually means the reason why this is happening is because you don't have confidence in your system. How do you get confidence? Forex Tester or any simulator is a brilliant way to build up your confidence. The key here, of course, is to get a lot of data under your belt and then use something like I'm sharing with you here, something like this risk calculator to see, what's going on here. Am I expected to see a 30% drawdown? If I know I'm going to freak out when I hit 30%, then I have to change my risk. If I change my risk with this strategy to 1%, guess what happens? The likelihood of a drawdown now becomes, I'm about 98.2% likely to avoid hitting that drawdown simply by changing my risk. So these are the sorts of things that we need to do as traders. If I don't follow my rules, if that's something that keeps happening, one way to get around that or to find a common ground is to get a trader to talk to every week, a trading accountability partner, someone that you will let go through your trades and say, well, hang on, why did you take this trade? And admit that you didn't follow your rules. Why did you get out early when your exit rules weren't initiated? These sorts of things. That's a way, it's called the Hawthorne effect in psychology. And that's basically the fact that we change things up when we're actually aware that someone's going to be watching us, basically. Or the bystander effect is the same thing. So I hope that this helps. I wish you very happy trading, and we'll see you in another video. Otherwise, we'll see you in the Small Accounts Big Profits course if you'd like to join us. Click the link below or above, and I'll see you soon. Bye.